Sure enough, as I expected, Japan raised interest rates. The Bank of Japan, the last economy in the world to maintain negative interest rates, raised its benchmark interest rate for the first time in exactly 17 years, raising its benchmark interest rate from minus 0.1% to between 0 and 0.1%. If you look like it's only added by 0.1%, it may seem like a small step from the Bank of Japan, but it's actually a big step for Japan's monetary policy. The point is to say that it has a huge symbolic meaning, which is a clear market signal. In fact, the Bank of Japan wants to tell the world that everyone is listening, and we will not engage in negative interest rates. This is not over. In fact, we also talked about it 2 days ago. The Bank of Japan has two strange monetary policies. In addition to negative interest rates, there is also a called interest rate curve control. To put it simply, it's an enhanced version of quantitative easing. On the same day, the Bank of Japan also said this: "We stopped doing it, and the era of Japan's aggressive monetary policy has gone through history." Then let me tell you what is interesting about Japan's situation is actually the reaction of the market. Normally speaking, you launched such a major historic interest rate hike decision, but the yen should skyrocket after all. The interest rate hike is right, not to mention that it is a historic step. But I didn't expect that after the announcement of the Bank of Japan, the yen not only did not rise but fell below the 150 mark against the dollar again. Which is not quite in line with economic common sense, right? It's a bit like the teacher is going to tell the classmates that, "Hey, we have a holiday tomorrow," and the classmates all cry. Tell me what they're crying about, right? Why is it so weird? What's the concept of this negative interest rate? For example, if the interest rate is negative 1%, then now you want to borrow 100 yen from me. And when you repay the money next year, you don't have to pay me back the interest, you even need to give me 99 yen. The reverse is the same for saving money, that is, if you want to go to the bank to deposit 100 yen this year, you will only be able to withdraw 99 yen next year, which is not even enough for the principal. You see, then you can borrow money very well, but you will lose a lot of money when you save it. As for the Bank of Japan, he just wants to use this negative interest rate to force everyone to say that you don't save money, you borrow more money and spend more money, right? Let this economy work, get rid of deflation, and enter our benign inflation. Of course, I'm giving this minus 1% just to make it more obvious to everyone. Actually, as I said earlier, it's actually only minus 0.1%. And this negative interest rate is actually only between the Bank of Japan and the big Japanese banks. And in the case of consumers like you and me, it's positive or almost zero. So don't you want to say that I'm borrowing money at this negative interest rate, and then I'm making money by hoarding it at home? Okay, so why did the Bank of Japan start raising interest rates now? Hey, in fact, the main reason is that he really came because of inflation. In fact, we talked about it in detail in the previous video. Japan has seen inflation in the past few years, but the Bank of Japan needs to confirm whether this inflation is really coming to Japan, so it turned around and left. The key to determining this is whether the company can rise with it, and it depends on the fact that Japan's most famous annual wage negotiation is the result of Haruto. The results of this spring fight came out in mid-March, and it was stronger than the market expected. Japan's large companies are raising interest rates by 5.28% for their employees, which not only exceeds its inflation rate of about 3%, but even reaches the largest wage increase in 33 years. As soon as the Bank of Japan saw that it was about to stabilize, there was no problem, so it immediately raised interest rates. Originally, the market expected that you would get the results in March. How to react? So the central bank was expected to make a move in April, but I didn't expect the Bank of Japan to be so anxious that the class deducted faster than anyone else. Okay, let's move on and say that the Bank of Japan raised interest rates, so why did the yen fall instead? The Bank of Japan's interest rate hike was actually expected by the market for a long time. But although the Bank of Japan raised interest rates ahead of schedule, its strength was too small. That is, he should buy treasury bonds, and then he wanted to continue to tighten, but he didn't make it clear. And he was so cautious that he even felt a little bored. In fact, this also indicates that the Bank of Japan may be so cautious when judging whether to raise interest rates in the future, which has led to a strange phenomenon that Japan has raised interest rates, but the yen has weakened. He fell not because he raised interest rates, but because he added an unexpected wave and did not have the expected firmness, so he fell. It's like saying why a classmate is crying when he knows that tomorrow is a holiday. It may be because the students thought that the fake tickets for a week were all set, but the teacher told them to put them on for a day and left a bunch of homework, so they didn't expect to put it more. And then the teacher's attitude is not sincere. Doesn't he just cry? The Bank of Japan, he ended one almost overnight, and the entire economy has almost adapted to a mode of operation. So what does it mean? What is the possible outcome of it? Attention, let me emphasize first, these are purely theoretical and practical influencing factors, and it can only be said that the impact of interest rate hikes, a single factor that controls the variable, on the market. First of all, if you want to raise interest rates, the yield will become higher, and the return on investment in the entire Japanese asset will rise with the tide. In other words, Japanese assets are more attractive than overseas assets. What will it lead to? Japan has the world's highest net worth overseas. There are Japanese industries all over the world, and many people have probably heard of it. Moreover, it has held the record of being the #1 overseas net worth for 32 years, and in 22 years this figure was about $2.83 trillion US, which is equivalent to 2/3 of its GDP. Mind you, we're talking about net worth, which is your assets minus your liabilities. If you were to count Japan #1 purely by assets, the #1 would definitely be the United States. Do you know who the country with the lowest overseas net worth is? The one that owes the most money to others? That's right, the United States has about 20 trillion in net debt overseas. What is this concept? It's about the equivalent of 5 Japan's GDP exceeding 1 China's GDP. Why is that? You can discuss it in the comment area. This is not our focus today. Okay, then let's be clear. Once it raises interest rates, the markets that will be most affected are actually the markets in the United States and Europe. So there are some people who may be more radical, and he came up and said that Japan's interest rate hike may become the fuse that triggers the collapse of US stocks. I don't think it's very likely, but it seems that some countries in Southeast Asia that are very dependent on foreign investment, so it may not be accurate. You must know that one of the underlying reasons for the Asian financial crisis was the return of Japanese capital. Hey, we'll have a chance to elaborate on this. I don't want it. Well, let's move on to the impact of this interest rate hike, which will not only lead to the return of Japanese assets, but also the second direct impact may also be the one that the market is most worried about. It's the Japanese government that has become more expensive to borrow. If you think that the Japanese government's debt level is so high, it may limit the Japanese government's spending and stimulate the economy. And in the middle, it may even lead to the credit risk of the Japanese government, which is very serious, right? So the Bank of Japan also knows that the market is worried about the sharp fluctuations in Japan's government bond market, and he doesn't want to cause panic, and he doesn't want the Japanese government to pay back. So at this meeting, in fact, he also made it clear that although I canceled this unlimited preprint monetary policy, we still maintain the original amount of treasury bond purchases. Okay, let's go on to say that the interest rate hike not only makes the cost of borrowing higher for the government, but also makes the cost of borrowing for consumers or companies in the economy higher. There are probably more than 500,000 zombie companies in Japan, and they have been living on loans with almost zero interest rates. And if the interest rate becomes high, they may be in big trouble. You see, this time, although the central bank said that we would continue to buy government bonds, but he didn't say anything about it, and he basically left it alone. And it is very likely that there will be a small wave of failures of companies that are not good in Japan. This impact is also the most basic and widespread interest rate hike from the bottom, which is to curb Japan's economic vitality, and if it is more serious, it may trigger some credit crises. However, the rate hike is on an industry. It's good for the financial industry because banks hate low interest rates very much, and if you have a higher interest rate, its potential profit margin can have space, and the profit margins of Japan's major conglomerates, which are all negative, will be squeezed very small. After the interest rate hike, not only will the banks be more oily, but the entire financial system will be stimulated. The impact of interest rate hikes on the Japanese stock market is unknown. On the one hand, we just said that the return of capital is right. and the return of inflation to normal may be good for the Japanese stock market. On the other hand, interest rate hikes have an impact on valuations that suppress the economy, including the strengthening of the yen, the impact on exports, and then the bearish. So it's impossible to say what it will add up. Okay, speaking of which, I've talked a lot about the potential impact of a rate hike today, and it's not just the impact of this plus a zero breath. To be honest, this is 100% 0.1 ha, then sprinkle the medicine. The ones we just talked about, it's some of the ripple effects that the Bank of Japan could have if it continued to raise interest rates. You just look at the recent weakness of the yen. Actually, the main factor is the changes in the United States, the rise in inflation, whether the Fed will cut interest rates this year, and the US Treasury yields have begun to rise again. So you can see that the Japanese side is raising interest rates at a rapid pace, and the United States is blocking interest rate cuts. For investors, the spread between the two sides is likely to persist for a long time. Then the carry trade is to short the yen and buy the dollar, which may still have oil and water for a long time, so everyone should hurry up and short the yen in this last window, and even face the risk that the Bank of Japan may enter the market at any time and give the yen a bottom. This leads to a phenomenon that may seem strange at first glance. As for the interest rate hike on the yen, the market is so cute that in April this year, the airdrop of shorting the yen reached the highest point since 07. As for the situation in the United States, the situation is not very clear now, but it is relatively chaotic, and when the time is ripe, we can also talk about the United States again.